The other opportunity I see with PayPal is not only the valuation being fairly reasonable or could be value trapped depending on how you look at it, but it's the ability with their strong balance sheet and free cash flow to now go out, make some acquisitions, and possibly build out a more unique business model. We are currently in the middle of earnings right now, and there's some interesting companies here that I want to review with you. Now, if you've been following the channel, Raytheon and Verizon were two companies that I highlighted, and both have definitely been outperforming the market. These were value type plays here that were tremendously undervalued and now are starting to get some price discovery. Now, Pfizer, on the other hand, wasn't so pretty. This one was a management debacle. I really think they led investors down the wrong route and then all of a sudden drop a bomb on investors on a Friday afternoon after hours that their guidance was all jacked up and they're pretty much kitchen sinking 2023, building out their pipeline for 2024. And so we reevaluated this one and got around $27 to $28 price target. And so that's where Pfizer now becomes more interesting when we look at what they're guiding for, what's in their pipeline, and kind of the risk that you're taking on. Now, I have about a $50 to $52 price target for PayPal. And I want to explain something here. I'm watching a lot of big time YouTubers really talk about how this company is very, very undervalued. And they've been talking about it since right around $60, $65 a share. I want to make it clear, I have a $50 price target for this one, and it scares me to own it, and let me explain why that is. I want to start out with the earnings per share coming down 3 consecutive years in a row, going from $3.54 down to $2.09. This is an area that's becoming extremely competitive. It's fintech all over the place. Everybody's in fintech, and it's basically a race to the bottom when it comes down to margins. It seems like there's no real competitive advantage right now, although PayPal is one of the larger players. We can see just by looking at the margins what's been taking place, and profit margins have been coming down as well, making it a little bit more concerning to own. So it is making sense that this stock has been selling off from roughly $100 a share down to $50 a share. When it was trading at $100 a share, multiple expansion was taking place because this was the player, it was the biggest player. So let me explain why I own PayPal. I own PayPal because of the scalability of the company and that the fact that they do have some strong generating free cash flow here. They do generate right around $5 billion of free cash flow pretty consistently. They have over $10 billion of cash and cash equivalents and total debt sitting right around $10.4 billion. So overall, when we look at a fintech company that's actually generating free cash flow, has a pretty clean balance sheet. And the other reason why I own this stock is because I personally don't want to own cryptocurrency, but they do support the shovels. So along with the payment transaction, they have crypto on their balance sheet. Multiple transactions can take place with the consumer, and they are one of the larger players when it comes down to payment processing. So that's why I personally own it here, is I do think around $50 makes it fair value. I think earnings are going to be a really, really telling story here, because if we don't see margin expansion taking place, if we don't see EPS growth, and if all of a sudden we're starting to see negative revenue growth, this thing could go downhill pretty quick. So I was pretty conservative in my valuations with roughly 8% revenue growth, 5% revenue growth, and 4% revenue growth projecting out over the next 6-7 years. Now for CVS, I basically have a $50 to $60 price target, and it's never really reached those levels, but I did start building positions in around $66 and $68. And a big reason why I like this company, a big reason why I think this company is undervalued. This is a company trading at a forward PE right around 8 times earnings. And the thing I like about CVS is management hasn't hidden from anything. They understand that the competitive landscape is out there. They're still issuing over $2 a share per quarter and projected to grow right around that 6 to 8% range. Now, another thing we want to see with CVS is going to be very similar to PayPal. We want to see margin expansion here. Top line revenue growth, while I do think it can grow, it's going to slow down here when we're talking about $339 billion of top line revenue. But where the opportunity lies with CVS is definitely going to be margin expansion. Can they get margin expansion going? That will bring multiple expansion. That'll bring free cash flow in even stronger. When we look at the balance sheet, $15.7 billion of cash equivalents, and they have a substantial amount of debt. But if we take a look at how this debt is being managed, it's being managed fairly well, going from $89 billion of debt down to $70 billion of debt. Now, normally a debt load like that would be pretty scary, but when we look at them doing over $300 billion of top line revenue and consistently free cash flowing over $13 billion, makes this one pretty interesting here. Definitely think there's some headwinds that is causing the price to be a little depressed. We all know about Amazon now wanting to get into healthcare, but this is an interesting business model here as they do have Aetna, they have the CVS pharmacies. They are now getting into more generic producing drugs. The question is going to be, with all these acquisitions that have taken place over the last 5 and 6 years, how are they going to bring this all together to run in a very efficient manner? And that's where I think the question is for CVS. So while these companies have sold off, they sold off for a reason. And that's either A, an opportunity, or B, it is a value trap. So we have CVS reporting before the bell on Wednesday, and I will do an updated analysis on CVS after they report. And we have PayPal delivering their report on Wednesday after hours. And so maybe I'll go live for that. So make sure you hit the bell, like, and subscribe if you are interested in any one of these companies or you want me to do a reevaluation on them. I'm going to be doing it anyway, so you might as well be there and ask questions live. Really appreciate your time. Thank you so much for spending it with me, and we will see you in the next one.